For more on that story, we're joined by the Shoprite Group CEO, Pieter Engelbrecht. Pieter, thank you very much for your time this evening. Before we get into the company's stellar performance, record performance and growth, let's talk about what is actually behind the consumers spending billions of rands more on food and other items when food inflation has been so high. And consumers under a lot of financial strain because we've seen that food inflation has touched the highs of 13%, but it doesn't seem it applies to Shoprite, the Shoprite Group.
Thank you. Yes, there is no doubt that the South African consumer is in, I call it, distress. We recently saw also a record number, I think the highest ever, of our debt default rate. And then what we have seen, certainly in our business, is that over the last 2 years, the participation of promotional items in the basket have increased by 5.3 percentage points. So customers, without a doubt, are looking for value. A lot of people's budgets are not flexible, which means they have to be clever and never underestimate your customer. They are very creative in making their budgets work, and we are doing our utmost to assist them. Therefore, in the past financial year, we had to sacrifice some gross profit margin to assist the customers because it's just not possible to give the current cost pressure and increases all through to the consumer at once.
Pieter, not only are you adding more jobs and you are adding more stores, but today you've promised that come 2024, your capital expenditure could be as much as 8.5 billion rand next year, in the next financial year, to support the record growth in market share. Where are you going to be spending this money?
Yeah, so our guidance usually around 3% of revenue is what we annually spend in terms of capital. The coming year, we're going to spend 8.5 billion. The additional on top of the 3% is twofold. The one is just over 500 million that we have to invest on those mass cash stores that we acquired to bring them up to standard. And the rest, the balance will be spent on expanding our supply chain in distribution center space. We intend to increase that by 220,000 square meters over the next two and a half years to support the organic and front-end growth of the supermarkets. We also intend to open another 340 new stores in the coming year. And continue our investment in terms of digital. So, yeah, a lot is going on, but we do believe better for us to invest through the cycle. If you get to a slowdown, it's always a very slow start as well to get back. And currently the business have got very good momentum.
Pieter, I want to off-ramp a little bit and talk about something that is quite important. The GDP growth numbers came in today, and we saw a 0.6% growth for the second quarter in South Africa. I've been speaking to a number of CEOs, and one says that South African businesses have been operating in a low-growth environment in South Africa for at least 10 years. You are sitting in a vantage position there as a CEO. What do you think is behind the sluggish growth in economic terms in South Africa that we've experienced, at least in the past 10 years?
Yeah, it has been exacerbated by, of course, we're all suffering from the load shedding. But it's I think threefold is currently is the deteriorating of our the rand, the exchange rate, in other words, the increase in the interest rates, and then definitely the price of diesel, apart from the fact that we have the load shedding. These macro environment factors have been very negative in terms of investment. In our industry, I can't talk for other industries, but in our industry, from the manufacturing side, we've seen very low levels of investment in the last 10 odd years. I've been saying that for the last, let's call it 10 years, that we are not seeing manufacturers increasing their capacity. We're not seeing multinationals expanding and investing in South Africa. Maybe it's because of a lack of incentives to do so, or they maybe think we are a high-risk environment. But certainly we have not seen the necessary investment in our industry, so much so that we have to support investments from our side. We have created a business unit called Next Capital, where we are extending credit to expand supply and develop small businesses and manufacturers, and providing bridging finance at month end to the value of R1 billion. So we're not well known for making excuses. So instead of seeing this as an adverse situation, we're embracing it and we're making the best of it that we can.
Pieter, before I let you go, Shoprite's own internal selling price inflation jumped 10.1% in the past financial year. That's the year 2023, compared to last year where we saw a 3.9%. Where do you see inflation going? Currently at 4.7%, many people are actually worried whether they'll be paying more for food, as in food inflation has actually been high. And they are worried about that. There's a huge worry about that. As you sit there, where do you think inflation is going to go as you start the new financial year?
So we saw our internal inflation peak in January at 12.1%. It came down in July to 8.6%. And although we saw the moderation, we must not confuse a slower inflation where prices are coming down. They're not coming down. They're just not going up so fast. So that's the first thing. And then, unfortunately, as much as I would love to see that inflation coming down more, we are seeing the fuel price increases tomorrow, diesel R2.80 a litre, and that affects the entire value chain. Most of product gets transported by road in South Africa. Plus, we hit stage 6 load shedding today again. All of that burning the diesel at that new higher price. So, unfortunately, I do not see us having a short-term relief in terms of the inflation.
Pieter Engelbrecht is the Group CEO at the Shoprite Group. Thank you very much, sir, for your time.